Hello everyone. Today I am going to discuss the Indian financial system. This video is important from the point of view of beginner in banking. I am going to start with components of an economy. Let's see what exactly are the components of an economy. The first one is I personally call them players of an economy. They play a good role. Individuals, households, industries. The fourth one, which I am referring to as a player in this video, is wealth, because ultimately money is one component that exchanges. Let's try to understand the interaction between these players or entities that we talked of right now. So there are households and industries. One of the basic transactions that takes place between individuals and industries is households supply manpower to industries. You might be seeing early morning, we leave our house for work in different industries, firms, offices, schools, whatsoever. In return from the industries, what we get is money. We get paid for the work we do there. That is the reciprocal interaction that takes place between industries and households. There takes place one more interaction between industries and households that I am thinking of right now. That is, firms or industries supply goods to markets and get the money back. The money we get paid, whatsoever what we do to it, we use some of it and we save some of it, like everyone saves for the rainy day most proactively. This saved money accumulates as wealth in households. The question arises here is what we do to the saved money as it gets accumulated, as this saved money does not give us any return, does not give us any profit. So in the economy there exists an entity that is called the bank. People go to bank, deposit the money, because for their money they get a return in the form of interest. When firms or industries try to expand their business, they need more cash, more currency. That's why for excess currency they go to banks, and banks provide them the loans. This is exactly how banks do business. They take the deposits from the public and lend them to the industries or the firms at a bit higher rate, a higher interest rate, and this difference in rate of interest is actually the income of a bank. Thus we can understand how money flows from one entity to other in a cyclic fashion here in this diagram. And this in fact is a downsized version of the very first economic model. Now coming back to Indian financial system, there are three regulatory bodies that regulate whole of the country's financial system. The first one is RBI, it is the Reserve Bank of India. It looks after banking, business and money market of the country. And second is SEBI, SEBI, Securities and Exchange Board of India. It looks after capital markets, that's stock markets. And the third one is IRDA, Insurance Regulatory and Development Agency. As the name suggested, looks after the insurance business. Now let's see the main functions of RBI. The very basic function of RBI is in India, the responsibility of issuing of currency lies with the RBI, as it's the issuer of the currency. It determines the amount, how much amount, what denomination and in fact the security futures of the Indian currency note is determined by the RBI. And the second role or second function of RBI is monetary policy. Basically, it's the RBI who decides the exchange or the flow of money in the system. It is governed through different tools. Monetary policy actually means money should be evenly distributed in the system. RBI does this through different tools like CRR, SLR, marginal standing facility, MSF, repo rate, reverse repo rate, etc. Just to describe these terms here, we will discuss this in the video to come. Using these tools, the monetary policy is basically a national policy to control the flow of money as a whole in the system. And the third function of the RBI, regulator and supervisor of IFS, that is Indian banking system. It undertakes all the regulatory functions of all the financial bodies of the countries and also non-banking financial companies. Role of regulator and supervisor, it is by conducting audits and supervision of all these bodies, and by the regulation of the Supreme Court recently, it has states that it can even RBI can even supersede the boards of certain banks. And the fourth main function of RBI is, you might be knowing that banks are not only taking money from public, and they also exchange money with the interbanks, intra-banks, financial institution, and times banks run short of money. If such thing happens, then RBI, the governing body that lends money to the bank as a matter of last resort. And the other regulatory body of the country's finance system is SEBI, Securities Exchange Board of India. It looks after the capital market and encompasses stock exchange, mutual funds. You might be knowing these days in various advertisements what are going, investment banks, brokers, dealers, or all body to look SEBI at all the entities present in a capital market of the country. The power and authority of SEBI, we will come to discuss that in videos to follow. So till then, it's thanks from me, and please leave a comment below so that I can know what to add further. Thanks.